So financial projections and overall evaluation of strategies. For this part, we have the past 3 years balance sheet. Here we have the income statement of Porsche for the past 3 years. This is the cash flow of Porsche for the past 3 years. For this part, we have the projected income statement of Porsche for the years 2022 to 2024. For our income statement, we have projected a yearly increase in the company's revenue and net income. Through these strategic plans, the company will be able to meet its objective of increasing the net income by at least 20% annually. A 20% increase every year would help ensure that the business will be able to survive, have a positive financial performance, and have the financial capacity to continue its plans for growth and expansion in the following years, thus allowing the business to gain a stronger position in the market. Increased profitability is a major goal for Porsche. Its aim of achieving certain financial goals are made possible by their effective and efficient business and organizational strategies and plans. Having an increased net income will aid Porsche in achieving their goals in years to come. High net income companies enjoy prestige in the marketplace. They are prosperous, have better stores, warehouses, and office sites, and can afford to give their staff larger compensation. As a result, they draw in superior workers. Here we have the projected balance sheet of Porsche for the years 2022 to 2024. So in comparison with the past 3 years, in the years of 2019 to 2021, it can be observed that the business's performance was negatively affected in 2019 and 2020. However, there is a significant rise in 2021. The recovery from the pandemic has positively affected the business's performance. According to Gauche 2021, due to the continuous recovery from the pandemic and the ease of restrictions, luxury car makers were able to experience steady rise in demand. With that, we have expected that the ease of restrictions, rise of demand, and overall economic recovery will give the business a greater opportunity to maximize its potential and pursue its strategic plans. The significant rise from the year 2021 has aided to a great increase in vehicle sales. Increasing sales is a strong indicator that Porsche has managed to successfully implement and manage their strategic goals. Increased sales frequently encourages innovation, assisting Porsche to stand out in the market and fend off rivals. Growth can also improve a company's reputation, give it more access to markets, and increase stability and boost earnings. Here we have the projected cash flow of Porsche from years 2022 to 2024. With the increase in revenue and net income, we have projected that the business will be experiencing positive cash flow and an increase in its capital and assets as well. This is a sign that the company is growing. These strategic plans will allow the business to secure its stability and maximize its capability to expand and pursue its intensive and integrative strategic plans. This will also allow the business to recover from its previous performance in the years 2019 to 2020. Having a positive cash flow will help aid Porsche achieve their goals as well. A positive cash flow from financing operations number indicates that more money is coming in than is leaving the business, increasing its assets. Additionally, a positive cash flow will make Porsche more attractive to its clients, partners, and investors, amongst others. Investors can determine how frequently, how much, and where a company raises capital by looking at the cash flow from financing activities. A solid investment is one whose cash flow is generated by regular business operations. For the financial ratios, all of the quick ratios are above the industry average of 0.88. All of the profit margin ratios are above the industry average of 10.18%. All of the operating margin ratios are in line with our objective of reaching at least 15% for the operating margin. All of the debt-to-equity ratios are above the industry average of 1.23. All of the asset turnover ratios are above the industry average of 0.46. From the projected liquidity ratios above, we can see that they have surpassed the industry average. This shows that the business is financially sound and less prone to experience financial difficulties. The safety margin that the company has to cover its current liabilities increases as the ratio rises. For the profitability ratios, Porsche has surpassed industry average. This would mean that Porsche has an adequate capacity to generate profits through sales or operations, as well as from its balance sheet assets and shareholders' equity. Porsche will profitably create value for its stakeholders. For the leverage ratio, Porsche has surpassed industry average as well. Leverage ratios are used to assess the proportionate amount of debt a company has racked up. These ratios contrast a company's overall debt load with its assets or equity. This would mean that as Porsche continues to grow their brand and expand globally, they will have more of their assets financed by debt. For efficiency ratio, Porsche surpassed industry average as well. Efficiency ratios gauge a company's capacity to effectively employ its resources and control its obligations in the short or current term. A higher asset ratio indicates that management is using the company's assets more effectively, while a lower ratio indicates that ineffective management. If the company is able to introduce new products to the market, modify existing products, grow in size and revenue, expand into new markets, diversify product offerings, and reduce competition, the company will be able to experience growth in the next few years. It is essential for Porsche to look into their financial ratios and make sure to achieve the best and optimal results for each year of operations. Porsche can assess its performance and compare it to that of other companies in its industry using financial ratios. A. Describe the current information system, whether it is capable of providing sufficient feedback on the implementation of activities and performance. According to Hartman, the IT project lead at Porsche, the company has an established business intelligence cloud that has aided the company's efficiency with regards to its internal reportings and customer relationship management. Basically, the cloud is defined as a powerful and radical enabler that offers access to a plethora of virtual services and applications such as data storage, networking, and analytics through the internet or dedicated networks. Along with the company's partnerships with SAP's cloud services, the company has a centralized data management system that enables efficient reporting across the company within real-time insights that drive fast, informed decision-making. According to Hartman, through the SAP Cloud Services, there is a holistic reporting approach that covers target group specific information demand on management and specialist level. Porsche's transformation to become a data-driven enterprise allowed the company to maximize the value of its data to improve performance and efficiency. Porsche's IT project lead Marcus Hartman has presented an example of how their information system allows the company to draw valuable insights, information, or feedback regarding the business's performance or activities. As presented in the image attached in the screen, the company's information or data system has allowed them to have a comprehensive overview on the customer's KPIs, detailed insight into customer and vehicle data, extensive lead and activity management reporting, real-time evaluation of customer satisfaction KPIs, measurement of various process or market-specific KPIs, and operational reports. Thus, the company's current information system is able to provide sufficient feedback on the implementation of activities and performance. In fact, the use of cloud services has brought a lot of benefits to the company. As mentioned in the Porsche Newsroom 2020, the company was able to adjust and improve organizational structures and processes, allow departments to communicate and cooperate in real time, enable flexibility for users to experiment with data while maintaining data safety and security, extend data-driven capabilities across the organization, allowing employees to connect and model data, access real-time data, and draw valuable insights to shape decision-making and increase efficiency.
Company system in measuring and evaluating strategic factors. Porsche can evaluate its performance in a variety of ways. To quantify the investment in new technology in new markets, current financial reports will break down the revenue made and allow comparisons to a prior quarter or year. Sales statistics will demonstrate the effectiveness of the company's strategy for expanding its customer base through acquisitions. Measurements of productivity can also be used to determine whether Porsche is maintaining its high levels or declining. If the latter is true, analysis will reveal areas that need improvement. Porsche has established strategic and operational performance indicators into their business. The company manages their defined strategic programs on the basis of performance indicators and adopted ramp-up curves. To give an example of how the company has applied strategic performance indicators, Porsche has stated in their annual report that as a measurement or evaluation of their strategy, which is the decarbonization program, all the Volkswagen Group brands, including Porsche, calculate the decarbonization index on the basis of standardized methodology. It is then consolidated as a performance indicator at the Volkswagen Group level. As a measurement or evaluation of their strategy, which is the new vehicle projects as of 2025, Porsche has defined the proportion of sustainable materials at the fleet level. For example, plastic recyclates and secondary source metals as a performance indicator. For finance related strategies, there are performance indicators for return on sales and return on investment. The healthy cost structure and the sustainably high earnings power of the Porsche AG Group are also reflected in the key performance indicators. The success of the company is made transparent by means of regular measurement, with the most important performance indicators being analyzed. Key performance indicators, or KPIs, are the important metrics for any organization to measure its success. They are used to evaluate the effectiveness of a company's strategy and operations. These indicators provide a clear picture of how well the company performs against its goals. KPIs can be used to gauge productivity at various levels. For example, regarding the qualitative indicators, a customer satisfaction survey can be used to assess whether the business can improve the caliber of its offerings, or ROI can be used as one of the tools to determine Porsche's profitability. Since performance indicators provide important metrics for Porsche to measure and evaluate the success and effectiveness of the company's strategy and operations, we have provided some recommended key performance indicators for the strategies recommended in the previous chapter. For marketing strategies, we have return on marketing investment, sales growth rate, customer growth rate, engagement rate, customer satisfaction score, and sales growth by country. For sales and distribution, we have sales growth rate, customer satisfaction score, customer growth rate, and forecast accuracy calculation. For operations, production, or manufacturing, we have production attainment, sales growth rate, carbon footprint, social impact, customer satisfaction score, perfect order rate, number of new products launched, customer growth rate, number of official production facilities, and production capacity rate. For finance, we have cost reduction metrics, production cost per unit, year-over-year savings. And for human resources, we have employee satisfaction rating, employee productivity, number of qualified candidates, time to hire, and first-year turnover rate.
Company's adequacy of the current control measures. The comprehensive risk management system and internal control system underpins the responsible approach to risk management used by Porsche. The internationally acclaimed CSSO Enterprise Risk Management Framework standard serves as the foundation of the organizational structure of Porsche's group, RMS-ICS. The foundation for a transparent and effective approach to controlling risks is standardized group-wide policies. This compromises of compliance, business principles, and integrity that are particularly crucial. Risks must be actively and publicly managed. The objectives are in line with the RMS or ICS. The risks must be taken intentionally and handled properly. Letter C. Describe the company's adequacy of the current control measures and ensuring conformance with the recommended strategic plan. The comprehensive risk management system and internal control system underpins the responsible approach to risk management used by Porsche. The internationally acclaimed COSO Enterprise Risk Management Framework standard serves as the foundation of the organizational structure of Porsche's group. The foundation for a transparent and effective approach to controlling risk is standardized group-wide policies. This comprises compliance, business principles, and integrity are particularly crucial. Risks must be actively and publicly managed. The objectives are in line with the RMS or ICS. Risks must be taken intentionally and handled properly. An effective RMS and ICS are required. The GRC process, or the Governance, Risk, and Compliance process, which focuses on systematic risks, and the Risk Quarterly process, which focuses on acute risks, are the three pillars upon which the group risks management and internal control system is built. In addition, Porsche is introducing operative risk management in various divisions. In the previous fiscal year, the RMS or ICS underwent further development. Nearly all brands have adopted a new risk management IT solution called Risk Radar. Through automated workflows and end-to-end system support for data analysis, Porsche has boosted process and data security and decreased their manual workload. The company's risk awareness is also being significantly increased, along with the risk transparency and end-to-end system support for risk analysis. In important businesses, the ICS has been standardized for dangerous business processes. Porsche will keep improving their RMS or ICS in the future. Porsche has also established a compliance organization made up of the local compliance officers at the group companies as well as the chief compliance officer and compliance topic owners at Porsche AG in order to avoid infractions and assist employees in complying with applicable laws. The compliance program at Porsche comprises both proactive and reactive actions based on the systematic risk analysis conducted throughout the whole group while taking into consideration the unique business models and settings the group operates in. In this context, essential preventive measures include the adoption of compliance directives, the provision of confidential compliance advice, and routine training and information for employees on pertinent compliance topics. Porsche continuously defines the needs for further compliance action and prevention measures. All Porsche employees have access to the company's central compliance help desk for guidance and information on compliance-related issues. Senior management and staff regularly complete task-related training about integrity and compliance to ensure adherence to relevant laws and regulations. One important response mechanism is the creation of internal and external reporting channels to which tips of potential violations connected to Porsche can be sent. They must also disclose any reasonable suspicions of a violation by members of the Porsche Group. The Porsche AG Executive Board receives regular reports on the compliance management system's implementation status as well as the proactive and corrective actions taken. As stated in the Porsche's official website, their quality process is centrally controlled, but is implemented in a decentralized way in individual departments and business units. For example, along with the main department of corporate quality, there are separate quality departments within the procurement, development, production, and sales departments. According to Frank Moser, Vice President Corporate Quality at Porsche, quality competence is thereby embodied throughout the entire corporation, and each unit has a high level of self-motivation to achieve the best possible quality. As stated in the Porsche's annual report and sustainability report of 2020 and 2021, Porsche's audit firm applies the national legal requirements and professional pronouncements, in particular the BSWPVBP, Professional Charter for German Public Accountants or German Sworn Auditors, in the exercise of their profession, and the IDW Standard in Quality Management issued by the Institute of Public Auditors in Germany. Requirements for quality management in the audit firm and accordingly maintains a comprehensive quality management system that includes documented policies and procedures with regard to compliance with professional ethical requirements, professional standards, as well as relevant statutory and other legal requirements. To ensure occupational safety for Porsche and its employees, the company has an organized and structured occupational health and safety management system. This ensures a uniform approach and is designed to ensure that legal provisions are implemented. This helps to prevent workplace accidents and occupational diseases as much as possible. High levels of customer satisfaction and close customer relationships have always played an important role in the company. The range of products and services of Porsche are always evolving. The more differentiated the range of services and products on offer, the more important it is to address each customer as an individual and provide them a tailored offer across the entire life cycle of their vehicle. Porsche achieves this with a customer relationship management system that extends throughout the whole customer relationship. An essential tool for determining how well Porsche has done in relation to its objectives is strategic evaluation. It's a crucial tool to evaluate their successes and flaws, and is also helpful for reevaluating their goals, which may have been set at a different period or under different conditions. With this, Porsche makes sure to follow their quality management processes and strategy control measures. In order to maintain the quality management system's suitability, sufficiency, and effectiveness, Porsche's top management examines it on a regular basis and considers any potential adjustments that may be necessary to the quality policy, objectives, targets, and other QMS components. Porsche's metrics are directly related to their strategic goals and encourage their staff to take their desired actions. To add, Porsche does not overburden their personnel with KPIs to monitor. It's crucial to instruct and teach employees in metrics tracking, which is what Porsche is doing without the continuous and regular skill and knowledge building of their employees. Without training, the data might not be monitored or updated properly, endangering the execution of their strategy plan. Porsche makes sure that their employees are equipped with adequate and necessary skills and knowledge to aid the company in conforming with the established strategic plans. Porsche AG has strengthened its control measures, business standards, actions, or processes throughout the years. Although the company has experienced both success and challenges throughout its years of operating, Porsche has continued to survive, establish itself through time, make billions of dollars in revenue, and has continued to grow its business. And that is the end of our STRAMA report. Thank you for listening.